Okay, just tweeted that out. I see stock market news is here. That's my co-host, and it looks like we're about ready to get started. So, once again, we'll just be talking initially about what did we buy and sell this week, why did we do it, and then we can move into some other individual topics. But Richard, would you like to kick us off?
Sure. My current view of the market, which is kind of the foundation of what I'm doing, is obviously we're pretty short term extended. So I've been pretty tentative with new buys at this moment and just trying to kind of ride out what I've currently got. I did actually sell half of my Sophie and half of my AFRM yesterday into Strength, just because they're getting a little bit extended. Or actually, half of the SI, not a firm. My bad. Just they're just a little bit short term extended. I love to add them back, add those positions back, and I did start some A, B, and B today at 193. My cost on that is not that great. I was in a meeting during the first hour of the market open, so that was my fault. It's tough to execute when you're trying to pay attention to all of that and some trade line stuff, but it's acting super well. A, B, and B, beautiful gap and go this morning. Definitely could have gotten in earlier than I did, managing risk at the low. I chose a little bit of an intraday entry on that one. But A, B, and B is going to be a focus of mine. And even if you don't own it at this moment, it's so strong right now. You've got huge volume coming in, and it will set up over the next few days, few weeks, allow you allow you to get in basically with low risk on a pullback to a moving average, some type of setup like that. But these type of moves are really created by institutional buying. Retail buying can't buy 60 million shares already right now. I think volume run rate is over 600% above normal at this moment. And if you look at the earnings, the sales, the earnings surprise was like plus 60% in terms of EPS. Earnings are off the charts. And this is a very young company. The chart pattern is what I really look for. You had that first initial move up from its IPO to around 220 or so, and then it formed a longer term primary base, and now it's moving up the right hand side of that base if you look at a daily chart. So this is really the an area of focus for me. Unity Software is in a similar spot. If you bring up Roblox, that may be starting something. Obviously, this has been super choppy, but also just looking at the character of the stock chart. If you bring up the chart of A, B, and B, it was very wide and loose during the period of February 2021. Ranges were wide, but if you look at the recent action, it's a little bit tighter, a little bit more manageable, and that's because more institutions have accumulated the stock as of this moment. So ABNB definitely a focus of mine. Another recent earnings gap up that's similar is ENPH. Beautiful action right into all-time highs, now letting the 10-day catch up a little bit, and I'll also be watching that one as well. Another stock I bought today was Lucid LCID, and I bought that through an intraday setup. It was an opening range breakout on a 15-minute chart. I got in a little bit slower at around 38.3, but this also acting super well, and I love the highest volume ever coming into the stock on Thursday the 28th. So for me, that's another hallmark that institutions are accumulating stock. Normal retail buyers can't buy 350 million shares or whatever that was on that particular day. So that's really a hallmark that institutions have changed their mind about the company, and it had a beautiful stage two breakout, potentially starting a super powerful trend. And we'll have to see what happens. I could be stopped out tomorrow, measure my risk against the low of today. But we'll just have to wait and see. And if the trend starts, I'll be along for the ride. And if it needs a little bit more time, more consolidation, I'll just wait for my spot.
So speaking to Airbnb real quick, once you mentioned it, I just went ahead and pulled up the unusual options activity. And this thing's, I mean, it's off the charts
Yeah.
right now. Couple things that are standing out to me. The first one is this morning at 9:30 a.m. there was a dark pool purchase for $84.66 million
Yeah.
of value. I was like looking at that, I'm like, wow. But then the other thing that stands out to me is so I see actually about a dozen unusual call options that came in, and what really looks interesting is that they came in as sweeps. So for anybody who's unfamiliar with this, when an institution is going to place a pretty large order, there's two different main types that they'll typically do, either blocks or sweeps. And a block means they were able to get it through just one execution, essentially a pre-negotiated term. But a sweep shows urgency. It shows they were executing through multiple, clearinghouses if need be. And I'm looking here and I see 1, 2, 3, 4, 5, 6, 7, 8 sweeps since 9:45 a.m. The last four came in after we've started the space, actually, with notional value coming in at 12:04. I see one for $702,000. That's a sweep, and they're going out. I mean, a lot of these are short term also. I have a filter on right now for short term, but like these are short term. Like November 19th, the 220s, the 200s. I mean, really the 220s for November 19th are just seeing massive premium right here. I actually have them pulled up on a chart as well. I may take an entry into that just based on what I'm seeing here. Absolutely seems to be killing it. So I love what I'm seeing there, Richard. Anything else you wanted to add to that?
Yeah, if you put an anchored VWAP at the first 1 minute candle today, buyers have been in control pretty much the entire day. The price is currently trending above that anchored VWAP. And also, a really helpful thing is if you go back to a daily chart, and I'll post this and then pin it to the top in just a second. But if you put an anchored VWAP at the top of the price action from 211 in 2021, you can see that overall sentiment has shifted now because we're above that anchor VWAP from the highs of the base. And that's when I like to start getting involved. I've tried this a few times during this run up. It's been a little bit choppy and I have gotten stopped out here, but one good trade can pay for all the small losses. And that's kind of how I like to operate. So ABNB definitely a focus going forward. I've used the product. Obviously, probably most people have here. The story is super easy to understand. And yeah, I think it's a really promising stock with great numbers backing up the story. And looking at a MarketSmith screen, you can see that institutional sponsorship has just increased quarter after quarter. And that's another hallmark that I look for in stocks that I'm potentially looking to concentrate a position into.
Love it. Also, Dan Oshman, I see you in the crowd. I totally messed up and did not tag you. I apologize. It's been a crazy freaking week, but I'd love to get you up here as a speaker, if possible. So awesome, Richard. Anything else? Any other stocks on your radar?
I also mentioned Lucid. AFRM, I'm looking to add on a full breakout here. You had an attempt yesterday on low volume. You might have to wait for earnings, which are the 10th for this one. A lot of the stocks I own, Coin, SoFi, AFRM, a lot of them report the 9th and the 10th of next week. So it should be an interesting week for sure. But yeah, we just might have to wait for earnings to happen and for that to be behind us before these will decide to make their moves. They are a little bit short-term extent at this point. So honestly, I would love it if they just go sideways, form some tight action, and then, yeah, we'll see what happens with earnings. But those are most of the ones I'm focused on. UPST as well, I'm watching. It's kind of drying up in terms of volume and also tightening up at the bottom of this base under 337. So that's one I'm watching as well. Bros, I was stopped out on basically the November 2nd candle as well as the November 3rd candle. That was I sold half on 11.2 as it broke the low of the 11.1 candle. And then the rest of my position I let go on Wednesday. And just looking at intraday chart on a 65-minute, one thing I love to see is a stock riding the 21 EMA on a 65-minute time frame. And Bros basically broke that trend on that 11.2 day. And now it's back below all the moving averages on that 65-minute time frame. So definitely for the short-term traders, the 65-minute time frame can give you a little bit more granularity. And that doesn't mean I'm bearish on Bros, by the way. I think the company is awesome, but I'm waiting for the trend to turn back up and maybe we revisit the IPO base high, which is 61.93. The 21 EMA is 63.87 right now. And the anchored VWAP from the 10-11 candle is right near that IPO base high. So there's a little bit of confluence in the 61, 62 area. So if we pull back to that area, tighten up, and I can find an entry, maybe an inside day and up, I'll definitely be looking to revisit the stock because I think the story is awesome and the numbers are pretty sweet as well.
Awesome. Appreciate that, Richard. Yeah, keeping Bros on my watch list as well. I see obviously down like 16% this week, but had that huge run up. So we'll obviously continue to have you on these spaces. So when we find that point of support, hopefully there'll be a good reentry
For
point.
sure. And could I add just one last thing? Yep.
course.
So one of the reasons why I was getting a little bit cautious and trying to look to sell into strength or sell on the first sign of weakness is we got on the 1st of November, we got about 30% above the 21 EMA. And that for me is a little bit extended. Obviously, in the beginning of an uptrend after a strong breakout, we can get very high, much higher than that. But we had a very poor close after getting 30% above that 21 EMA, above that moving average. And then we had a bad, as I said, a bad close with a close under the open. And then I was looking to let that first half of my position go if we continued and fall through for that weakness. And we gapped up and then broke that low. And that was a sign for me that the trend, at least in the very short term, had changed a little bit, and the character of the stock had changed a little bit. And now I'm just waiting for another base to form. So I thought I'd just add kind of why I was looking to sell into weakness a little bit there.
Got it. Makes sense to me. Appreciate you being on here, Richard. Always a good time. Looking happy in your Santa hat. All right, Dan, glad you got up here. Apologies for my lack of communication, but we had it on the calendar. How's everything going? How was your week in the market?
Is this thing working? Can you hear me? Oh,
Yes,
cool.
sir.
Things are good, man. Can't complain. I had a few nice poppers last few days, so I'm pretty happy about that. You want me to just talk about stocks or?
Yeah, yeah. What did you buy? What did you sell
Well,
this week?
I bought
And why'd you do it?
Frog. I bought Frog 3 days ago, and had a really nice pop in earnings. Actually yesterday after hours, and today's pulled back a little bit. I added to UP, which is Wheels Up, which is a private jet service that has some relationship with Delta. On looks like Wednesday, right? Which is looking really good. If you look at all these names that I bring up, they all have this same kind of pullback, extended pullback into a volume shelf, and then price kind of goes horizontally. It's kind of my thing. But Up in particular, right? It was a SPAC, right? Its volume profile has this giant point of control node around $10, like a lot of SPACs do, right? It's currently trading a little under 8, and it's been forming what will, if consolidates a little bit longer in this area, be a new point of control. Again, measured from the IPO. And that's something that I always look for is bullish to me, because it implies accumulation at lows, which is, when smart money, big money, right? Funds, banks and hedge funds all tend to pile into things right early. And, they're large orders, and their limits kind of create buy walls, right? Which, stop the prices decline and absorb the selling. Right. And then ultimately there's no one left to sell. Right. It works through all the bag holders who are kind of panic selling and trying to get out on every pop. You form a nice volume base and kind of can launch off from there. It's why we sometimes call volume shelves launch pads. But this type of setup you see everywhere in the market right now. View had it. View's been popping off all week, but View had it, going into the previous week. Some names that are really out of favor right now, like BLI, which is Berkeley Lights, which is some kind of biotech technology company. It's currently doing this exact thing right now, forming what looks like a huge new point of control when measured from an IPO around current lows, right? It's still in downtrend, but it has a gap above, and there's a lot of volume coming in, scooping up all the selling. You saw the same thing on HIMS, right? HIMS is still also currently doing that, but you have a downtrend that's been going on since February, right? If you connect a February high to the next major peak in June, right, go all the way down, it just broke out of that yesterday. Right. And today it's gone in for a retest. And if you look at the volume profile on HIMS, it's got that beautiful accumulation at the lows. Right. Somebody's stepping in with big limits and scooping up all the panic selling. Right. And kind of giving it a base to work up from. So I could go on all day. My watch list is full of these, but those are a handful that I really like right now.
How do you, I guess, decide on your exit from these plays?
Typically the exit is the major downtrend, like on BLI, right? If you connect the high in December of last year to the next highest point in June of this year, you have this downtrend, right? Which terminates around $33, $32, depending on how long it takes to get up there. So that will be my first exit. If we smash through it, it will become, something that I watch for support. But, if we run up to that and then start to struggle up there, then it's probably a sign to take some off the top. And the funny thing is about these is the anchored VWAPs tend to align. Like if you anchor VWAP and hand off on like BLI, for example, right? You anchor at the high in December of 2020, you hand off in February 2021, right? That takes you right about to like $37, $38, right? Which is right above where the next volume shelf is. So like I like to play these things as they fill the volume void, right? Especially on something like BLI where you had a big gap down, right, in September. You had this like swoosh kind of pattern where it like goes down and then like quickly pops back up and then starts to consolidate horizontally right along its point of control. That's telling me that there's buyers picking up these shares, right? So then if it can break above the next AVWAP, which is around 27, right, then I think it's clear skies until like the mid 30s, right? If it can get above that, then the next AVWAP's 38, right, and then 44. I don't think BLI can get higher than like the mid 40s, right? Because there's a huge amount of volume there, and it's going to have to have a meaningful shakeout before it can push through that. But I think there's a chance it can get up there, right? Same thing on like HIMS, right? Like you can use anchored VWAPs as price targets, right? In fact, the anchored VWAP from the all-time high on HIMS takes you right to the next volume shelf around $11, right? Which is also a 50% retrace of the most recent pullback. So there's like a lot of confluence in that area. And it's trading at about $8, $8.40 or so. So, that's pretty meaningful upside on something that's, under $10.
Definitely makes sense to me.
Yep.
Awesome. And then, so going into next week, what are some of the ones, I guess, besides the ones that you just mentioned that are kind of forming maybe similar patterns that you're going to keep an eye on next week with maybe some potential points of entry?
Yeah. So like MJ, the weed ETF, is one that I've been accumulating in a position in all week this week. Right. And that one's really interesting because if you take just a simple trend line on a log scale, right, and you're connecting the March 2020 low, right, to the next low in October, right, and then extend it out all the way to the right, that is literally where it has wedged down to, right? So it's testing that trend line right now. Right around there, about $1 higher is the current point of control, right? So it's trading a little bit below it. You often see this kind of thing though, right? Like it's price kind of starting to form a base. It's a riskier trade for me because it hasn't started basing yet, right? It's still very much in decline. It should decline to a level where, it would be logical for it to get a little bid here. That's also, right around, there's also the 0.866, which is the last inner fib, right? But the 0.866 retrace, right, is right where it's at right now. So I'm keeping a really close eye on MJ. And I may continue to accumulate a little bit more. I'm not fully sized in it yet, although I'm pretty heavy in it. Another one that, I've kind of been keeping a very close eye on these. I have small positions in both. I'm looking to add, right? But Root and Mile, right? Both are new car insurance companies that like do this like smart insurance stuff, where it like tracks how you drive with a mobile app and then gives you premium breaks if you're a good driver, right? Or doesn't charge you for insurance if you're not driving much that month, right? All of these are wedging down very hard into divergent lows. Right. So, I mean, that means that price keeps making lower lows while the RSI, which is the momentum oscillator I use, is making higher lows. Right. So I'm looking at those two to start kind of going sideways. Right. Like I would expect them to both pop a little bit. Right. And then start to kind of consolidate sideways, very much like how Up did. Right. And how Frog did in particular. Frog and Mile and Root, you could almost, like, it would be hard to tell the charts apart if you didn't have a label on them, right? Because they all are the same, like, aggressive downtrend falling wedge, right? They all fall into kind of divergent lows, right? They start going sideways a little bit, and then you have maybe earnings or some other catalyst, right? Maybe a sympathy play, but something kind of pops it out of there, right? And it's interesting how like smart money comes in and accumulates at the very bottom, right? Like that's what forms the bottoms is large limit orders and large market orders, coming in and swooping up the panic selling. When you see like volume spikes at lows, but price doesn't really move, right? That's what's happening there. It's panic sellers or bag holders who are finally giving up on the position, capitulating, right? And then there's somebody who's less time sensitive and can wait it out a little longer with deeper pockets, absorbing those shares, right? Because they've decided like fundamentally like this is a good value at this price, so that they'll like absorb the selling. And like I said, ultimately the sellers run out of steam, right? Like there's only so many, panic sellers in any situation, right? Eventually, when they run out of steam, there's no one left to sell, and buyers have absorbed it and can give it a little bit of a push higher from that point. That's what I look for, right? And that's why the pattern that I look for is the pattern that I look for, right? Like the long downtrend into a volume base. So that's a couple that I've got an eye on. Do you want more? I got more.
Yeah, I'd say, I guess just anything else you want to add to that. I'm happy to hear. I've been charting them as you've been going.
Yeah, I mean, look, I think the pattern is more important than any individual setup. You saw the same thing happening on DNMR, right? Which is one that I've been in since I got in on the 1st of November, right? Right when it popped through this downtrend line that you make if you connect the February 2021 to the September highs, right? It gives you a nice downtrend. You had to break through it. But what was interesting to me and what I think people should take away from this is if you ignore the most recent like 5 or 6 candles and just look at it before it popped, right? Because it's the same thing as every other chart I've mentioned. You have this long downtrend from highs, right? 60, 70% down, right? And then you have it stopped going down. It starts to go sideways, right? Like you stop making lower lows. In fact, the first sign on DNMR was the higher low it made on October 15th, right? It's just slightly higher, but it is higher. And, it popped up, struggled a bit, pushed through this anchored VWAP, right? And, it's on its way to my target, which on this one is about 21, right? That's where I'd like to see it get to. If we can pop 21, then we can run all the way to 24, right? Which is where the previous point of control is, and also the all-time high anchored VWAP, right? They both terminate around that same point between 24 and 25. So I just think people should really internalize what volume means, right? Volume by price, not volume by time, right? Because when you see something that's been declining for a long time, right, and you're like, this seems like a good fundamental value or a good company, right, to own and sit on for a while. How do you decide when to get into it? Right. Because most of my trades are not short term, right? Like I tend to sit in things for a long period of time. I've been in PLTR literally all year. So how do you know when to add? And the best sign I've found in my almost 12 years of trading, right, has been looking for volume to come in after a decline when price started to go sideways, right? When you see that point of control start forming at lows, that's telling you that shares are being swooped up. So hopefully that's helpful.
Yeah, I think that definitely is helpful. And with the volume by price, maybe some people aren't familiar with that. We could talk more on that another time, but it's a pretty easy indicator to throw on in TrendSpider, which is where I'm currently doing my charting. And Dan is the CEO of TrendSpider. So if you have questions on the platform, I'm sure that you could reach out to him or someone on his team to find out more about that.
Yeah, anytime.
Awesome.
I'm just I can't beat this volume at lows horse enough. I feel like people try to catch knives a lot in the trading world, right? And do so, without the knowledge of what levels people are, big money's coming in at. And that's why like a lot of people look at options flow, right? And dark pools, right? All of these things are kind of the same general theory, right? It's let's try to follow the big money. right? But options flow can be somewhat misleading, right? Like, because you don't know if someone is opening a large option position. You don't know if they're covering one. You don't know if they're hedging, like someone may buy puts on something that they own long, or sell calls on something that they own long, right, to hedge it because they intend to continue to hold it, but they're getting a little nervous, right? So there's a lot of reasons why like dark pool trades and options trades happen, right? But there's only really one reason why accumulation happens, in particular at lows, right? It's because that people with the big money, right, have decided that this is a good place to accumulate shares. So like all these things are kind of aimed at the same thing, right? Trying to figure out, where the big money is coming in. And it's so much simpler if you just use volume profile, volume by price. You anchor it at a major swing point, the previous all-time high or IPO or something like that, and you just wait to see when price or when volume starts to accumulate, and maybe a downtrend breaks, right? It's the easiest thing in the world that few understand or spend time on.
Yeah, yeah, easy to learn, difficult to
Yep.
master. For sure. Awesome. Yeah, and if anybody wants to check out TrendSpider, feel free to hit me up. I've got a discount code. With that being said, appreciate you, Dan. I'm going to go on to James, who I think is another TrendSpider user.
Hey,
What's
what's
going
going
on,
on,
James?
Gavin? How you doing, brother?
Doing
I'm
good. How
doing
you
pretty
doing, man?
good. Always a pleasure to be on.
100%. Would love to hear what you've been buying and selling
Yeah,
this week.
absolutely. First I just wanted to say, it's always a pleasure to listen to Richard and to listen to Dan. One of the things that I really love about trading is there's so many different trading styles and strategies. There's no one cookie cutter style of trading to get to the finish line. And that's just one of the things that I really absolutely love about the stock market is that every individual has their own style that works for them. So I just wanted to kind of throw that in there, but before I go into like what I've been doing this week, I really haven't been doing that much this week. I did nibble on a little bit of A, B, and B this morning. On that massive gap up. A lot of volume coming in. My current positions right now, I'm holding AEHR, Affirm, AFRM, Coin, Hut, and Tesla. Unfortunately, this week, I was a holder of apps, APPS. I personally thought that they knocked earnings out of the park, but it was not a good reaction. We gapped down on heavy volume. Luckily, I had sold half of my position last week for around 22-23% profits on the first half, and I actually wound up breaking out even on the second half, so I wasn't too happy about that. It kind of messed my P&L up for this week. I'm still up pretty nice, but it could have been a really solid week if it wasn't for apps. And then also, Coin and Affirm, we have earnings next week for both of those stocks. I have around 20 to 25% cushions on both of those stocks. I'm gonna hold them throughout earnings, so I'll definitely be looking to add on pretty heavy to those positions if we do get a solid earnings report. And that's kind of it. I've just been really, I have been sitting on my hands this week, just letting my current positions work. I think we're a little bit, stretched out in the markets right now. I'm kind of expecting a short-term pullback. So I'm not really looking to add on too many positions. As I said, I did add on a little bit of A, B, and B this morning, just because the gap up just looks so beautiful. But I am expecting a little bit of a pullback for us to come in a little bit. I do feel that we're a little bit stretched out, so I don't want to add on too much exposure and, get shaken out of new positions.
Yeah, I hear you on that. I also got kind of messed up a little bit on apps. I actually came in after earnings to try to catch a bounce back, and I did catch it, but I didn't sell it. And then it just continued to kind of drop, which was unfortunate. So I eventually just got stopped out of that. And I'm also in Airbnb. I am I am following the flow here to an extent for sure. I do agree that it is a little bit stretched, but I do believe in it. I think going into Monday, I'm hoping that we see kind of like an initial maybe morning pop, and then I would sell that, and then kind of let it trail out.
Yeah, it's a little bit fascinating because like the Nasdaq, the S&P are definitely extended at these levels, but we're having these killer earnings reports that continue to come out one after the other, and we're just getting these absolutely massive power earning gap ups. Bill, Ford, LC, Confluent, earnings were yesterday just absolutely beautiful power earnings gap up. AB and B. So, you know, despite the fact that we're a little bit extended, we're in earnings season, and these stocks just continue to move with very heavy volume behind them. But as I said before, I would definitely be a little bit weary of adding on more exposure than you currently have right now until we get a little bit of a pullback and let things settle and digest a little bit.
Yep, totally makes sense, man. Anything else you wanted to add on
Yeah,
that?
man, that's pretty much it. One of the big ones that I'm looking into right now is Amazon. I just posted the chart up on the feed up top. We got this beautiful multi-month ascending triangle base. You got a really nice volume shelf building around price. We're actually, if you pull up the weekly chart today on Amazon, we're actually just starting to push out of that base. We've definitely had some nice volume coming in to Amazon. Last week was a lot better than this week, but if Amazon could break out of this base and resolve higher, that would definitely be a very strong signal for the markets moving forward, in my opinion.
Yeah, definitely a lot of strength there. Awesome, James. I appreciate
Yeah,
that.
man.
Real quick, I do want to just make Yeah, real quick, I just want to make a comment. I've mentioned this on some of my past spaces, and I finally spent like a few hours and got through most of the DMs today. So I'll just go ahead and shout out again. For anybody who's enjoying Twitter Spaces, it's a little bit difficult sometimes to let everyone know when all the spaces are going to be. I do like a weekly calendar at the beginning of the week, but sometimes more spaces come up and more speakers come up. So in order to keep it, current and really easy to access, what I've done is I've created a Google Spaces calendar. It is free, it is public. Essentially, all you have to do if you want to be on it is DM your email and just ask to be on the calendar. In addition to that, I also have a newsletter, and Stock Market News, my co-host, has a newsletter, which I'll probably ask you if you want to be on it. If you want to be on those, just feel free to add that into your DM. But definitely the calendar, I think, has been helping a lot of people. I think there's over 400 people on it now on this calendar that are getting basically all of essentially you'll just be able to toggle it on and off on your calendar to see whatever space is going to happen. So like this one, the one that I have at 4 p.m., a bunch that I'm planning for next week covering things like SPACs and following the flow and NFTs and crypto. I really do try to cover all areas of investing and finance from technical analysis to fundamentals and whatever else there is out there. So if that's something you're interested in, feel free to go ahead and DM me. I spend like hours going through these and adding people, but it's honestly a pleasure because I think people do get a ton out of them. And it's basically free education that you couldn't even get, in some places like college and stuff like that. So I recommend making the most out of it. And I'd be happy to add you to it today or tomorrow if there's too many that come in. With that being said, I'm going to go over to MBIT. MBIT, I'd love to hear about your week in the market.
Hey, Gav, thanks for having me on the space. I just want to give a quick shout out to Wolf and Stock Market News for allowing me to speak today. They're great follows. And so today, this week, I started my position in NVIDIA around November 3rd before the boom. And the reason why is I think the semiconductor industry is going to be so much larger than a lot of people think. In 2021, semiconductor sales are expected to reach $527.2 billion worldwide. and the year-on-year growth rate in 2021 is expected to reach 19.7%. And the reason why NVIDIA specifically is because they have pretty strong financials, and the trailing 12-month revenue and profits have been like 2 to 3x that of a couple years ago, and I expect some of that growth to continue. Also, the acquisition of Mellanox a few months back was pretty important as they combined the leaders of AI computing and high-speed network data processing, which represented that their focus is no longer on a specific niche. It's on the semiconductor industry as a whole, and what is to come 5-10 years out, which as a long investor is what matters. But in addition to their GPUs is what powers some of the mining and blockchain at more of a consumer level. And the global blockchain technology market size was valued at $3.67 billion in 2020, and it's expected to expand at around 82.4% from 2021 to 2028 compound annual growth rate per year. So basically, I expect some of that growth from the blockchain, AI, and the tech industry to trickle down to the semiconductor industry and therefore NVIDIA. So I guess the key takeaway for why I invested in NVIDIA is I think tech will always continue to grow. And you can't have these new technologies without semiconductors, as they're one of the most important parts to creating a product. And NVIDIA is one of the leaders in the space. Another stock I've been sticking with, I didn't put any more in this week, but I've been sticking with it for a while now, is Tesla. I did do a quick podcast with Sawyer Merritt on it. But many people were not in favor of the company for a while because they were losing money for every car they sold. But they were doing what Amazon did a number of years ago. They took all the money they were taking in and pouring it back into the business, which allowed for their own factories and allowed for more growth in that perspective. A lot of people compare them to other EV companies or automobile manufacturers, but the reason I think you can't do that is they're more of an energy company because they have more access to verticals, including like solar, energy storage, AI, rideshare software, etc. Meaning they're building an ecosystem. So I think it could be like the Apple of energy and electricity and EV vehicles. But I guess we'll see. So one interesting statistic here is that in the fourth quarter of 2018, Tesla reported one accident for every 2.91 million miles driven with autopilot engaged, which partly shows that they're years ahead of research in terms of autonomy. They also picked up quite a bit of traction PR-wise as they recently hit their $1 trillion market cap, which comes after the news that Hertz placed the order for the 100K Tesla Model 3s. But what's even crazier is despite the large order size, according to Elon, Hertz didn't receive a single discount, and they paid full price per car, which after running the math would total like $4.9 billion or 1/5 of the Teslas that were delivered in 2020. The amount of Teslas that were delivered was not the surprising part here. The reason why I think the Hertz deal is going to be pretty important is it's going to be a big movement in the car rental industry, because other car rental companies could start also considering investing in EVs because Hertz is a big one. They'll follow suit. And I think that could be a big movement in that sector. So yeah, overall, I think Tesla and NVIDIA are great companies, and I'm all in it for the long term.
Yeah, I mean, those have been huge runners, obviously. I think Tesla, is continuing to show its strength today as it pulled back from, it's had a couple dips over the last few days, even with the Elon tweet, and is continuing its surge towards 1,300, currently sitting around 1,240. And then NVIDIA, I believe, did it hit new all-time highs today? Yeah, hit it new all-time highs today again, up 5%. And now it's pulled back a little bit, but it's holding that 300 level, which is pretty neat to see, an 18% run last week, 50% run last month. I mean, 50% run last month is insane. I feel like I was looking at this back at, I guess the 220s kind of area was where I was really eyeing it. And I was looking for it. Oh, it's overextended. We'll get a pullback. We'll come back to the, the 190s. I'd love to enter there. And now you're sitting over 300. So to see that run has just been absolutely crazy. What else is on your radar going into next week?
Going into next week, I'll probably continue keeping an eye on the tech industry. Specifically, I guess we'll see what happens with Apple. I'm also considering investing a little bit more into PayPal, as their stock has been down quite a bit recently. But I have some in PayPal, but I think they're a pretty good company and pretty strong financially. So I guess the whole Pinterest thing kind of set them off a bit recently. But if that deal doesn't go through, I think that could be good for the company. But yeah, I guess we'll see what happens next week.
Yeah, PayPal's definitely an interesting one. One that had a lot of dark pool activity over the past week, which has kind of been holding it down as they've been, continuously coming in. I do see a little bit of activity on it today. But yeah, I hear you. I think they had like several consecutive down sessions. Is it? Yeah, it's down today again. So, I mean, only down 3% on the week, 13% on the month. But yeah, I mean, continuously falling from those highs when it went up to, over 300, now down almost back to the low 200s. So yeah, continuing to keep my eye on that. Awesome. Appreciate you being up here a bit.
Yep, no problem. I appreciate it.
Definitely. So I want to echo one thing that Embit said, which is, again, these speakers really are top tier. Some people that I look to for advice when it comes to long-term investing, short-term investing, charting, growth stocks. I highly recommend checking them out as we're going through here, just throwing them a follow. They're definitely worth it. And it's going to continue to enhance your timeline. With that being said, Evan, would you like to go next?
Yeah, man. I appreciate you for putting this on. I just want to echo that point. The speakers we have up here are amazing. TrendSpider is a platform that I'm getting used to and learning. I'm new to that space overall, and I'm enjoying it so far. I'm a long-term investor, so I'm definitely a little bit different than a lot of the people that are up here. I don't move too much, and most of my activity is dollar cost averaging into positions that I own. Just two things to add on NVIDIA and Tesla. Those are two of my biggest holdings. I've been holding them for multiple years. Quickly, NVIDIA, it's moving up this week, I think, as a major sympathy to the whole metaverse theme. Facebook changing their name to Meta. We saw Microsoft have an announcement that they're making their own metaverse. Nike filing 7 patents for digital goods. So I really think that this is a metaverse sympathy right now, which I've been preaching, that I think that this is a little bit further away than people think, that it's more like a 5-year plus time horizon before we start seeing real progress. So when I see this type of move, it's NVIDIA starting to price in future growth a little bit in this industry. I'm not going to sell, but I think this, we might have a little bit of consolidation for a little bit, or it might take at some point some, sideways movement for a little bit. And then with Tesla and the Hertz deal. So what it really came down to was the time of deliveries, or when the cars are going to be delivered, is what they're talking over in the contract right now. The Hertz did receive delivery of a couple Tesla cars, but a nominal amount. Apparently, it's very limited in some major cities right now. And the original expectations of the contract were for 10,000 cars to be delivered next year. And I think it was going to be incrementally higher than that in the future. So they're actually in active discussions right now, and I think it actually could be lower than 10K for next year. So the delivery impact that these Hertz cars will have is going to be pretty nominal. For me, like the real impact I see from this, for me, like a big struggle I've seen with Tesla is that you really can't test drive them. And I think this is a solid opportunity to get the Tesla cars out there, get more people behind the wheel that have never driven a Tesla and can kind of see the new opportunity and see the new car. So that's really what I like about it. It's obviously not worth a $200 billion, $300 billion market cap increase, but I don't know if that was the full reason for it. So I think Tesla and NVIDIA are in the same boat. I am very happy that I am owning them, and I have owned them for a while, and I plan to own them for a while, for long into the future. But I don't necessarily think this current strength can continue, obviously, forever. And if we saw a pullback, I wouldn't be surprised, but my conviction is not driven by price. But what I was doing specifically this week, first, I DCA'd into a little bit of Penn National yesterday. I know this is a controversial one. I actually bought a little bit more this morning. They had earnings in the morning, and they were down 10% from that. And then a report came out from Business Insider with some pretty serious allegations against the CEO, Dave Portnoy, and that sent the stock down another 10%. To me, the allegations don't seem too credible to me if they turn out, and they turn out to be true. then that will be 100% a different story and change my thesis. But I'm willing to DCA in a little bit. I think the stock should have been down 10%, not 20%, and I think that creates a little bit of an opportunity there. And then another name that I was buying a little bit of this week was BRPM as it got closer to 10. That's the SPAC that's trading, that's going to merge with FaZe. Truthfully, my cost basis is a little bit higher, so I'm just trying to lower it closer down to the $10 mark as a part of it. Right now it's trading at like 10.40 or something. It did 10.30. It did move higher. It was moving. It was close to like 10.15, 10.20, which surprised me. I'm looking to get in and around there. I'm not buying the second, but I do plan to buy a little bit more of that. And then just quickly for next week, I am watching a bunch of the earnings. We got another busy week of earnings coming up next week. Disney, PayPal, Coinbase, Palantir, I know is another popular name, Roblox, Unity. So those are the names that I'm really eyeing next week for some earnings names, earnings sympathy plays, and some good news catalysts.
Love it. Did any other earnings this week stand out to you?
There were a couple good ones. I was really focused on the Square one from yesterday, which was okay. Slower Cash App growth, really driven by slowdown in Bitcoin revenues. I was really fascinated that on the conference call, and pretty much the majority of the investor presentation was literally all about Cash App. Like, it is clear to me that Square sees their growth and sees where their company is going to be Cash App focused. They talked on the conference call about a lot of opportunities for growth they see ahead, whether it's expanding their product set, getting into bigger clients, or expanding internationally. So I'm still pretty bullish on the name based on the earnings call this week, but there was definitely a slowdown in the business in the short term. I'm just going to go and quickly look at some of the other ones that reported this week.
I'm happy to add. I've seen some DMs coming in already right now for people that want to be on the calendar. Just make sure that your email's in that DM, and it will be easy to get you on there. It's moving pretty quick. I think we'll probably have 1,000 people on there within a short time period, and that means that we'll just have some awesome crowds in these spaces, which makes it easier to just get better and better speakers, more quality speakers, just keeps the ball rolling. With that being said, I think that was touched on from all of our speakers. So I'd love to probably move into, well, first off, Richard, I actually wanted to throw over to you. I know that we just had the Fed stuff this week. We've talked about it a little bit, but are there any macro events that you're keeping an eye on as we move forward in the coming weeks?
Not too much. My philosophy always is if it matters to the stocks I trade, I'll see it on the chart itself in terms of price and volume reactions. And so far, growth is responding well. We're continuing to see strong breakouts on earnings like ABNB, EMPH earlier. I'm not super focused on macro, because if it truly matters, it will show up on the stock charts for me and will affect the price and volume action of the leaders. Sorry if that's a little bit of a cop-out
Perfect.
answer.
Got it. No, I totally understand with what you were saying there. That definitely makes sense to me. So I'll just go over, I guess, for a second, what I was dealing with this week. So let's take a look at the profile. Yeah, okay. So I picked up a APPS digital turbine as well call earlier this week. This was after they had dropped about 17% following earnings. I was trying to catch the bounce there. I did catch the bounce, but I didn't sell. I was up about 25%. I wanted to try to keep pushing my luck, but unfortunately, I ended up taking a decent sized loss on that since I did not sell. About 60% is where I got stopped out. That's where I'd set that. I also purchased some shares of Hut 8 Mining. I like it. I like the stock. I'm unfortunately not super sure. I didn't want to go in with options. It's just, so tied to crypto. I was a little bit scared with overextension, but I did want to get some exposure, and, it's probably a good thing since it's now had a down day since I've purchased. I think I'm pretty much flat on it, but obviously if I had options, I would have been taking some losses over the last couple of days since it has been down. In addition to that, I sold, Evan, I guess we'll talk about this later, but we bought a skills put together, and we bought a skills $12 weekly put, and the stock fell about 10% following earnings. So we made almost 100% on that. I think about 85% on that. And the last thing that I did was today, where I actually went ahead and grabbed this Airbnb call. That was actually during this. I love live trading on Spaces. It's been fluctuating decently heavily throughout this space. So the call was all the way up to maybe up about 25-30% at one point. Now it's kind of flat. It's up about 2.7%. Again, I don't plan on selling this today. I'd like to hold it into Monday morning. Really looking at this is based off a lot of the call volume that came in, also the dark pool that was coming in. I don't know if there's any more that's come in just yet. Last one I saw was at 12:04. Oh yeah, here we go. Okay, 12:45. Literally 10 minutes ago, there was another one that came in as a sweep. So again, people are rushing to get into this. They're decently high strike prices as well. This one that just came in at 12:45. I mean, it wasn't huge. It was $10,000 a premium, but it was a $250 call, $250 strike price for November 12th. So they're looking at next week. Like there's money that thinks this is going to run. That's not necessarily institutional money, but the big one that stood out to me was the one that I copied exactly was $702,000 a premium on a sweep at 220 for 220 strike price for November 19th. And I just literally took the exact same trade. I've been doing more of that as I've seen that seems to be that institutions who have a bit of an edge seem to know what they're doing. So that was what went on there. In addition to that, obviously this week was pretty filled with just a lot of different spaces. Learned some really cool things about crypto analysis, about following the flow, and a number of different other areas. I am going to, I think, go ahead and just go into a little bit of wrap up with my speakers. Again, we're going to have another space at 4 p.m. also, but I also need to write my newsletter in the meantime, which I'm probably going to ask people who DM'd if they want that newsletter as well. And so let's go into some of that. Richard, would you like to go first with some wrap up?
Yeah, sure. Just a few final thoughts. My philosophy always is that the price and its trend reveal how institutions are viewing different stocks and the actions they're taking. They aren't able to sell or buy their entire positions in one day because they're just accumulating so many shares at any time. So I always like to focus on stocks that have been gapping up on volume, showing huge signs of accumulation versus stocks that are gapping down on volume. They're in a distribution phase, and they either need time to consolidate, form another range before they're ready to make another advance. And I'd rather be focused on stocks that are trending versus consolidating in a base. So yeah, other than that, just manage risk. If you're trading, use stop losses, use position sizes wisely, and yeah, best of luck out there.
Absolutely. Appreciate you, man. Cool. Dan?
Not a whole lot. Great space, Gav. Thanks for putting these on. I really appreciate them. I like listening to them, even when I'm not speaking on them. So appreciate everything you do.
I appreciate that. It's a huge part of my life now. My life basically revolves around Twitter Spaces, either posting or setting them up or DMing and everything. But I feel like the fire hose of knowledge is just impossible to put a value on, and very, very much worth it. And I'm glad to hear that you enjoy listening to it.
No, definitely. So thank you. And I know you can't hear everybody, but everyone should clap for you because you do a lot of work for everybody here.
I appreciate that. Well, if they enjoy it, you know what? People have been telling me that. I've been getting someone just commented and tagged me in the DMs. Listen, I definitely understand. I think that people appreciate it, and it's highly motivating. And I love the affirmation. Who doesn't? To see that people are learning so much. And once again, I'll reiterate it. I've said this on a few other spaces. Like I'm pretty early on in my trading career, so I'm doing this as a way for myself to really learn a ton from others who have decades of experience. Who have superior knowledge and an understanding of the markets than I do, and I think everybody else, I think probably feels the same way. That's why they're tuning into these. I'm just lucky enough to get to ask all my questions on all my favorite stocks. All right, let's keep it rolling. James, would you like to go next?
Yeah, absolutely. Thanks for having me on Spaces. It's always an absolute honor to be here, especially to be able to share this space with Richard and Dan and all of the other guests. If you guys aren't following all these people, you need to. Richard is absolute genius in his craft, and at what he does, he puts out some of the absolute best trading interviews that are out there today. So, if you don't follow these guys, absolutely check them out. Dan, Dan Ushman, CEO of TrendSpider. Make sure you're following him on Twitter. Lots of awesome charts, lots of awesome feedback on the market. And that's basically it. I just wanted to actually read something that John Boyk, the author of Monster Stocks, just posted. It's an excerpt from his book. And what it says is, the bigger the advance in the market within the first days and weeks of a confirmation after a downtrend, the stronger the market uptrend likely will be. You will also begin to see many solid leading stocks stepping up during these early days of that newly confirmed uptrend. That activity confirms the turnaround as well, and is also the waking up period of the truly monster stocks that will lead the new uptrend if it sustains itself. So that's just a little tidbit to leave you guys off with.
Love that. Appreciate you coming on, James.
Yeah.
And Emden, any final words?
Yeah, I just want to say thank you, Gav and Stock Market News, for having me on the space. I really appreciated it. It was a great space. And during these times of volatility in the stock market, just make sure to do your own due diligence, understand the risk. And yeah, that's pretty much it. I appreciate you guys having me on the space. Make sure to give everybody up here a follow.
100%. Pleasure having people on. And I really did enjoy the space. I felt like it was, concise and information driven and loaded. And I came out of it with several new names on my watch list. And that's what I recommend people do in these spaces, right? Take down some of these names. You don't have to live chart them. You can chart them afterwards. You could take a look at them. You could dive into the fundamentals. But this is, I think, a really great just idea generation and kind of like a brain think space to come away with ideas for the future. And Evan, would love to hear if you have any final comments. And also make sure that my co-host Evan, he's going to have he'll be hosting at 4 p.m. EST, a really, really good follow, consistently putting out news, earnings, not what's it called? Not too much fluff. You're just consistently getting really, really good information from him.
I appreciate that, Gav. Well, listen, if you guys need a third time to told you, or even like the 10th during this whole spaces, like here it is. Follow everyone up here. Wolf really only puts together, high level people who can give really great thoughts to come up as speakers. So, it's just they're not only going to be able to give you that thoughts in the spaces, they're going to give it through their timelines and tweets as well. So each person up here is going to give you a different valuable Twitter feed and Twitter ad and person to follow. So definitely do that. I appreciate you for putting these on, Gav. And yeah, thank you.
100%. All right, Dylan, I see your comment. BIGC is on my radar. I'll have to look into that. Also, I'll just reiterate it once more.
Second.
If you,
Actually,
yeah.
I'm sorry. Someone asked me about Peloton earlier, asked us to talk about it. If anyone has any last fleeting thoughts, maybe we indulge that one guy.
Yeah, any thoughts on Peloton? Dan, Richard?
I was just looking at it. It looks ugly.
Yeah, I'm throwing up a prayer for the holders. Richard?
Yeah, my current view is, so I had some Peloton. I've tried it a bit during the space, but I really sold my big position as it broke the 50-day on the 18th of 2021. And it's just in a longer-term downtrend on a weekly called a stage 4 decline below a declining 30-week moving average. And it's gapping down in huge volume. So it really needs to form a range, build another base. But it's just not a leading stock anymore like it was in 2020.
I if I can add on Peloton, I think it's a really good case study for the opposite of what my typical setup is. Like if you flip this chart upside down, right, I would be all about buying it, right, because you've anchored a volume at its IPO or its all-time low in around the COVID times, right, and you see this rounding top, right, where it makes a higher high, a lower high, right, it keeps doing that. Forms kind of a eclipse or a rounding form, right? And then you look at the volume profile, and during that entire rounding period, right, it's just distribution, right? It's just heavy selling, and it's the opposite of what I look for, right? This is big smart money selling to retail, right? Selling to us chart pattern losers here, right? And they're distributing the shares that they had acquired previously to us at the highs, right? For whatever reason, right? And you can see that very clearly on a chart. The volume profile just gives it away. AYX is another one of my favorite examples of this exact type of thing happening, right? I mean, if you want a sense for what Peloton might do, look at AYX, right? On like a monthly or weekly chart and compare the two. So for what it's worth, I think the volume tells the story.
Yeah, just touch on that. Just, such an important thing when it comes to the market. Just, never fall in love with a stock. When the story changes and the character of the stock changes and it's giving you new information, take it as it is. At the end of the day, price is king, and price is telling the story of the company. So, even if you absolutely love a stock, if a stock isn't going up in price, it's not a good stock.
Yeah, there definitely are situations where people fall in love with the product, but 100% you have to keep an eye on the price movement. With that being said, going to go ahead and wrap this one up. Really appreciate the couple hundred listeners who tuned into this. That was awesome. I hope you came away with some really good ideas. If there's more that you have, that you're looking at a specific stock and you want to get analysis on it, you can probably tweet out and tag some of my speakers or slide into some DMs. I'm sure they'd be willing to help chart or do some fundamental analysis, whichever is your preference. I'm going to go ahead now and add the people who DM me to the Spaces calendar, to the newsletters as well, if they're up for that. And with that being said, I wish everyone a good rest of your Friday afternoon, and I will see y'all at 4 p.m. EST on the Space with Stock Market News. Take care, everybody.
Later, guys.